Watcher everybody. So I've been threatening to make a video about this diagram and the AMM, that's the XRPL automated market maker, and some of the research that I've done into this and the XRPL for quite a while. And I'm only on version 0.4 of what is the conceptual architecture, actors and ancillary systems as I understand this ecosystem to comprise of. So some of you have already seen this diagram, and what I want to do is try and explain it and also invite critical feedback, because there probably are mistakes in this. And I'm really just trying to understand the AMM on the XRPL, but then also extend that to a couple of other things that I think people are not aware of that could massively change your opinion of this technology and what it could mean for the price action of XRP and generally what it can offer in terms of utility to the financial sector, or the new financial sector, because I think we're moving in that direction. So let's just start from the top here with the Ripple partners and customers. So Ripple Pay is ODL, on-demand liquidity, and Liquidity Hub. These two are Ripple pieces of enterprise software that Ripple sells to its customers. On-demand liquidity is essentially a solution for sourcing liquidity for satisfying cross-border payments using XRP. And Liquidity Hub, I believe, I need to do a bit more digging around this, but it essentially has, I think it's Bitcoin, and I can't remember what other assets there are in Liquidity Hub, or precisely what it does. So I need to do a bit more research in that. And then we have Prisma. So these are three pieces of enterprise Ripple software. Prisma is deployed on cloud. I think ODL can be on-prem, but it may be also available as SaaS, software as a service. Same with Liquidity Hub, but I need to double check all of those things. So what is Prisma? Prisma will automatically split and route orders across any market participant that exposes an API. So Prisma provides best execution while minimizing market impact, presenting and presents a single API to its customers. Prisma's addressable market participants venues include centralized exchanges, decentralized exchanges, over-the-counter markets, brokers, wallets, custodians, trustees, and AMMs through the XRPL DEX, decentralized exchange. So essentially, when these two pieces of Ripple software are trying to source liquidity, it's Prisma that's doing that for them, and it's getting that liquidity from two sources. One of them is secondary markets, all of these elements that we described. So anything that presents an API, Prisma could potentially query to obtain price data and route the order in the most efficient manner without moving prices and source liquidity for that particular transaction, whether it's a purchase from Liquidity Hub or it's Ripple Pay doing a cross-border payment. So Prisma, like best order execution, order routing, all of these good things that people have been talking about in TradFi for years, but haven't really managed to translate very well into the crypto sector. It's a big component, an important component of Ripple's enterprise software that makes Ripple solutions attractive to institutional customers. By the way, none of this stuff is particularly cheap. It's not good for retail investors. I think enterprise software comes at a cost. I don't know how expensive it is, but I'm sure Ripple's sales team negotiate the prices accordingly. And for their large institutional customers, whatever it is, it's a lot cheaper than what they're probably doing or what they're used to today. Not just cheaper, but it offers faster settlement with all the benefits that brings to a business. So, and these are what we call secondary markets for liquidity. Prisma can also source liquidity from its primary market, which is the XRP ledger itself. So let's dig into this. Is an element of symmetry here that I like, and hopefully this will become clear to you guys as well. So the XRPL consists of a number of architectural components. We've got the primary ones are the payment execution engine, the decentralized exchange with its central limit order book, and then the AMM liquidity pools. So these two are really one element, I think. So we'll just call it the DEX with the order book as one, the payment execution engine, and then the AMM liquidity pool. So just as Prisma routes smartly orders at this application level with APIs and secondary markets, the payment execution engine mirrors those capabilities inside the XRP ledger. So we have paths and path finding. So it's trying to looking at XRPL addresses, for example, trying to find liquidity across the shortest possible path for a transaction, I think. Again, if I'm wrong on this stuff, for God's sake, please correct me, right? I'm trying to understand this as best as I can. If I look at this, my notes on this, in the XRP ledger, paths are used in cross-currency payments to find the best exchange rate. The path in XRPL is essentially a sequence of currencies and issuers that a cross-currency payment can flow through. When a sender initiates a cross-currency payment, the XRPL payment engine searches for the most efficient path, considering available liquidity, currency pairs, and exchange rates. The path finding process is what enables the XRPL's decentralized exchange to automatically convert currencies at the best available rates. So path finding, looking for the best available currency rates. Rippling is a feature of the XRPL that allows balances to shift between trust lines to facilitate payments. When a payment is made between two parties that don't have direct trust line, the XRPL can ripple the payment through the connected trust lines. This is handled by payment execution engine. And then auto bridging. Auto bridging is a feature that allows payment execution engine to use XRP as a bridge currency for cross-currency payments. If there's no direct order book between the two currencies of a payment, the engine can split the payment into two steps, converting the source currency to XRP and the XRP to destination currency. But all of these are actually fairly common things in TradFi. And back in Ziglu, we had something similar to auto bridging as well, where we attempt to settle an exchange for you by using an intermediate currency if that pair didn't exist. That's something that we certainly looked into and lots of other organizations have. But I think what I like about Prisma and the XRPL is that one of them is at the application layer, satisfying enterprise customers and using the APIs that are available in the outside world from all of these various venues and indeed wallets. And that is being mirrored by the XRPL. That capability is being mirrored by the XRPL payment execution engine. It's a nice symmetry that is which does this on chain. And today it's on the XRP ledger, but maybe through bridging and other capabilities, who knows how this will expand to other level 1 blockchains, or maybe Flare will do that. We'll come on to that in a minute. The decentralized exchange is one of the oldest DEXs that's been, or the oldest potentially DEX available in the cryptosphere. I don't want to spend too much time on that right now. Suffice to say, let's just go through this. The DEX in the XRPL is a fully functional decentralized exchange that allows users to trade issued currencies directly with each other. It's decentralized because it operates on the XRPL, a distributed ledger that is maintained by a network of independent validators. The DEX includes mechanisms for placing offers, matching trades, and managing trust lines and balances. It allows users to trade any pair of issued currencies, each of which has its own order book. The DEX operates according to the rules of the XRPL and is secured by the same consensus protocol. And then there's a central limit order book. The CLOB is a component of the XRPL's DEX. It's a data structure that holds all the current offers to buy or sell specific currency pairs. Each offer in the CLOB indicates a price and a quantity at which someone wants to buy or sell. The CLOB is central in the sense that it's a single authoritative source of information about the current state of the market for a given currency pair. It is limited because it only includes orders that meet certain criteria, such as being authorized by the account that placed the order and the account having sufficient balance to cover the order. The XRPL's transaction processing mechanism matches compatible offers in the CLOB to exchange trades. So that's the DEX, very important piece of the XRPL. And now we come on to the AMMs, because these are the sources for deep liquidity, and really importantly for us as XRP holders, this is how we can begin to earn yield on XRP, which to date we haven't really been able to do very well. You could go to an exchange and use their staking services, for example, but that's all centralized. All yield and staking capability today on XRPL is descended up. It depends upon centralized entities. Now, with the possible exception of Flare with F assets, but that's on the horizon. Great announcement from Hugo and the team about that yesterday, with the progress of F assets on their Kotlin test network. So they're moving in the right direction. And I very much see what Flare are doing is complementary and extending what's available on the AMM. But the automated market maker provides liquidity from a number of different sources. These could be, we think stable coins are going to be a really important source of liquidity on the AMM. CBDCs, of which there are pilots in 6 countries. And I'm going to call Georgia out because I think something really special is happening in Georgia, which I've captured in this diagram as well. Obviously, crypto markets, like I think anyone can set up a AMM in a pair of crypto assets. Obviously, these initial ones, it'll probably be Ripple setting these up, or the XRPL Foundation. I don't know what the order of this delivery is going to be. I'm sure there's a plan, a rollout plan for the AMMs. And this is another area which is bloody exciting and I think doesn't get enough attention, is real world asset pairs. So if you've tokenized assets from, well, where would it come from? Let's say, I call this section digital capital formation. It's a combination of asset issuance and capital formation. So if I have real estate in Dubai that I want to tokenize, I can issue these assets using trust lines and IOUs on the XRPL. Probably should put them into that square there. And then I can proceed to attempt to form capital around the tokenized assets. Typically that would be by locking up into escrow, and then upon reaching a certain amount of interest in the token, it would be released directly into an AMM. This is something I'm thinking about at the moment. I think, again, not anyone can issue any asset on the XRPL. It's a decentralized exchange, but I think what people are missing is the capital formation element of this, where not only can you issue the asset, but you can immediately create an AMM in that asset pair and provide liquidity to the XRPL network and provide 3 sources of income to whoever's invested in your tokenization or in your token, providing XRP liquidity for your asset. Those 3 means of volatility harvesting, market maker spreads, and the arbitrage bid fees that are available on the AMM. So I think where is this liquidity going to come from is the question. Like, who is going to provide this liquidity? Well, on the institutional side, some of the entities that we think could add liquidity will be banks, market makers, wealth management, hedge funds, fintechs, institutional DeFi, retail DeFi, investment funds, sovereign wealth funds, state pensions. Existing market makers would benefit from this. This would be if you're an existing market maker, why wouldn't you contribute to or create AMMs? It's an area of growth that you should probably consider, at least evaluate for your business. And then I think the big ones here that people aren't really considering are sovereign wealth funds and state pension funds. They could begin to allocate some of their assets to AMMs as well. This I would call growth income investing. So, people are seeking yield for that purpose and got free sources of yield that we described. But again, just as importantly, I think asset issuance and digital capital formation are all enabled by the XRPL with the AMM and this broader sector here with Ripple. By the way, anyone can emulate what Ripple have done here. This is, as far as I can see, if someone wants to compete with Ripple, they can just go ahead and take any one of these components and try and reproduce it and do a better job of Ripple. Obviously, Ripple get a major head start. Now, this is where it starts getting really interesting. And I mentioned Georgia because Georgia in the Caucasus is Ripple have announced, or the National Bank of Georgia have announced that they're carrying out a pilot for programmable money, which is essentially CBDCs. But also programmable banking is moving in Georgia at pace. PaveBank recently came out of stealth mode. And with programmable banking, the use cases are frankly endless. But the larger ones for institutions include things like treasury, liquidity, finance, payments, managing market risk, liquidity risk, credit risk, operational risk, audit and compliance, reporting, AML, KYC. All of these can be associated with a programmable bank account, which would have a programmable app or any number of programmable apps applied to that account. And then where it gets really crazy for me is how does a programmable bank account exploit or leverage the capabilities of programmable money, or vice versa. And I just think this is the area that I get goosebumps about, because I think there's so much that can be done here that it opens up so many possibilities which haven't been exploited before for a number of reasons, because it's been so difficult for programmable banking to really evolve beyond just a handful of steps, because it gets complicated so quickly. And I think previous attempts at programmable banking haven't really unleashed the full potential because of three reasons. One, the engineers that were developing them were part of the banking team itself. They weren't specialists. So while they were delivering features of programmable banking that were in demand, they probably weren't delivering them to the highest quality or the rigor that's required beyond a certain number of steps to make it safe. So, you hit 7 or 8 steps in programmable banking and things get so complicated that it's cognitively very difficult to ensure that this thing behaves the way you expect it to behave. And, typically what you would need to do is run this stuff with live data for several months to test it. You wouldn't dream of implementing a programmable banking app without having run it in production for some time. And previously, this has been really difficult on infrastructures that were on-prem and not in the cloud. The cost of the compute, highly prohibitive to run this stuff in parallel with live data to test it properly. So that limited the capability that could be offered with programmable banking. Again, the other reason is not having specialists develop this. So where you have programmable banking and programmable banking apps, it would be nice to have an app store for those. And it would be, I think, an area where you will see specialist firms coming into the field to write these financial applications, which are very complicated and difficult, need to be tested thoroughly before they're unleashed and vetted. So this is why you would have something like a programmable app store. And then finally, what we haven't had before is AI intervening to manage that complexity. So the three changes that really make programmable, far more sophisticated programmable banking available. And then in conjunction with that, we have programmable money. Now, I actually think programmable money is really any kind of smart contract-based token. It doesn't have to be CBDCs, but what's interesting with Georgia is we have both programmable banking and programmable money about to surface, I guess, in the next year, 2024, I would imagine. We'll see some headlines around this. So for me, what's fascinating is what can we do with this kind of setup here? And I haven't even touched on Flare or Zahao or other, and I need to make this diagram bigger if I'm going to do that, and probably will have to do that at some point. But how can all of this come together in a way that reduces risks, creates opportunities for providing liquidity to fulfill real needs of the financial sector? I just think there's a lot of opportunity here, and this is what I'm exploring now. So if you like this, some of the people that have already helped me put this together, thanks to everyone in there. But feel free to critique this. Please send me some information on it. I can't wait for the AMMs to come online. I can't wait for F assets to come online. I can't wait for programmable banking to come online. And I think there's a real a nexus of opportunity being created in Georgia, out of all places. It's not to say it's the only one, but there's one that I absolutely recognize that I think could be spearheading something very interesting. So yeah, thanks for that. And any feedback, just let me know. Cheers. Bye.